Hey Rob, wearing the same color. Oh, he's still muted.
Hey, good
Hey.
morning.
Morning. Have you heard anything from Rose? Is she doing well?
No, I haven't heard one way or another, so I assume that means she's having fun.
Yeah. Yeah, so many people around me have COVID now.
Pardon?
So many people around me have COVID now, so it's just probably just a matter of time.
Oh, yeah. Yes, I guess I didn't realize that she had it. I know she was going to be on vacation, but darn.
Oh yeah, she told us last week to me and Robert. We had a chat on Slack. She said she couldn't make it because she caught COVID after her travels.
Oh, after. Okay, that's
Yeah,
good.
I think she's back. Yeah.
All right.
How are things going with you?
Yeah, pretty good. Been trying to learn a little bit about natural language, inference processing, whatever.
Yeah. These days, I guess what does best are these humongous models that you can't possibly hope to train or understand. So I kind of lose interest at that point. But I mean, from a technological, practical perspective, they seem to be doing great.
Yeah, I mean the GPT-3 models, and I'm not exactly sure how people utilize them. It must be, I mean, they set up an API, and then I guess, do they try and train GPT-3 to solve their particular problems, or do you know how it works?
Yeah, so the way it usually works, so you don't have to train it. It already works for many things out of the box.
Well, yeah, but still.
Yeah, so there's two ways you can sort of manipulate it and make it work for you. There's one thing called prompt engineering, is to basically figure out how to structure your inputs, your prompt, to get the kinds of things you want out of it. So that could be like you put in like summarize this text for a 5-year-old, colon, and then enter, and you put your text. Maybe you find that works better than just saying summarize and colon, and you get different kinds of inputs. So there's a lot of it just tweaking different inputs to get, and there's no systematic way of doing it. I guess people have their own intuitions. They found out if you put a colon and a space, it works better than if you don't. Like there's all these things you just do experimentally. But then there's also fine tuning. So you can do that. So it used to be that you had to send them the data onto the OpenAI server, and they would fine tune for you, and then you pay for it, and then you get the new model. But now they allow you to train yourself, so you have some control over how long you train, learning rates, that sort of thing. So if you have a data set that's your proprietary data set, you can use it to fine tune and have your own custom model built on top of GPT-3. But it's very fine tuned, so it's only like a few hours of training. You can't train from scratch, obviously, because it's huge.
Well, for example, I don't know, suppose I was a sports writer, and I wanted the article to come out in certain ways. So like I wanted, I don't know, 4 paragraphs, and the first one is gonna focus on the outcome, and the second one is going to focus on people had a big impact on it.
Right. I mean, first of all, the limit is, I think, still is 2048 characters, right? So it's only so long it can be.
Is that right? I didn't know that.
Yeah, because the more you make the input size larger, the more connections you have to make between every element of that. So it gets much exponentially harder to.
So it's 2K on the input, not on the output.
It's 2048. I believe it's on both.
Okay.
I could be wrong. Yeah, I think it's on both, because yeah, around that 2048. They might have extended it a little bit, but it's never going to be like unlimited. because it still tries to figure out the relation between every pairs of words in your thing. So it
Mhm.
gets exponentially bigger and bigger and bigger. But yeah, I mean, there's different ways of doing it. So you could, so what I did when I was at Unbounce, you could do like one paragraph at a time where you get, so let's say you generate the first paragraph with some prompt, give me a summary, including this, and you can give it some examples, right? In the prompt, if you can, within the 2048 limit, if you put 2 examples and example outputs you expect to see, then usually GPT-3 understands what you want out of that input. And that's usually sufficient. But if it's large enough, then you might ask for, give me a summary, including these facts, and then it would write it for you. But then you can use that as an input to the next prompt. To whatever was generated could be the prompt to the next part of your paragraph, and then keep going, like bootstrap your way into building the article. So that's another way. But the problem is sometimes you lose coherence, right? Because you don't have any memory, right? So whatever it is has to be in that input, otherwise it would not remember it. Yeah, I mean, I think technologically, we used it to create headlines for like landing pages, and it worked really well. I mean, you could just give it some examples because the headlines are so short. We could give it a bunch of examples, and it would learn, like, and you ask for, like, you want it funny, you want it exciting, and it would understand. It would give you what you want, and sometimes it was way better than what other, like, the copywriters would come up with it. So they looked at it and they basically couldn't tell the difference, and they sometimes picked the one that the machines picked. I mean, sometimes it looked really ridiculous and everybody could tell, but so you still need quality control. You can't just generate these things that go with it, but yeah, it works surprisingly well. But there was a recent, in the machine learning street talk, I don't know if you still follow the channel on YouTube, they interviewed Noam Chomsky about language models, and he was very, very hostile towards them. So they asked them, well, what does he think the limitations of language models are? And he said, well, before I talk about limitation, you should tell me what can they do, and they can do nothing. They're just not doing anything. So you don't even, he didn't even bother talking about limitation. He said it's complete garbage and useless, and it's not really doing anything when it comes to language processing. I think he acknowledged the, like, engineering feat that they did and like what it could do for companies, but from a NLP science linguistic perspective, he said that they're absolutely doing nothing. So
I wonder if headlines would pass a Turing test.
oh yeah, for sure. But I mean, it's short enough. I mean, I don't think that's how the Turing test works. Like, it needs to be a conversation. And I think it depends. If you make it long enough, it probably still fail at some point, right? Because it's going to say something funny. But even if you go now to the OpenAI and try to chat with GPT-3, it will pass the test. It looks pretty good, better than most humans. But yeah, and yeah, it makes you wonder, like, people are thinking like, okay, this is getting conscious, but I think eventually we're going to realize that we are just like GPT-3. We have a bunch of inputs and outputs we're spitting out. We feel like we're generating things out of some intuition or something, but it's just a big matrix lookup table that we don't have access to, and we just like generate these things out of it. I don't know.
Yeah.
So what do you want to do with these models? Do you have any particular applications?
Well, so yeah, me personally.
Yeah, I thought you said you were looking into it. Is it just like personal interest, or you want to use it in your work? I can totally see uses for like finance and trading.
Yeah, no, I was mainly doing it for teaching purposes.
Okay.
Trying to introduce, I mean, so I gave my students, let's see, some summaries of earnings reports, and asked them to do a sentiment analysis on it. But again, from my perspective, I'm interested in in the language sort of processing part. These the way they try and sort of predict what's going to come next. So it could be a word, could be a spelling. I think those models may actually work really well for other types of things. So that's one thing that I'd really like to do, is to kind of do a better job, or sort of a more comprehensive job, of looking at these models and apply them to, you know, kind of economic and financial time series.
Yeah. So I think the technical term for it is autoregressive models. So that's what they're called. So it means you just use the current input to generate the next one, and then you keep going, right? You can go forever.
Yeah, that's one group of them. There's kind of a generalization of that called ARMA or ARIMA models, which is, so there's an autoregressive and a moving average component. There's another generalization that are called ARCH or GARCH models.
Okay.
And that's where the volatility changes over time as well. And that's actually something we see a lot in real data. But in general, yeah, most of the machine learning models, this is my characterization of them, are really kind of cross-sectional models. They're not time series models. In other words, you got a bunch of observation at a point in time, and you're trying to come up with a prediction or a classification of that. And those models generally don't work well on time series data. And even some of the, I mean, the LSTM types, they do a little better. But I've seen, I saw a paper or two that were looking at more of the, what are called sequence to sequence models, which I don't fully understand. And they seem to be kind of the best alternative so far.
Yeah, that's also like transformers, right? It's the core of all these language models. And they use it a lot in biology when they want to map like sequences to something, proteins to something. Yeah, so they're pretty popular. The problem with those sequence to sequence models, they need a lot of data, because there's a lot of connections that you need to learn between all the members of one sequence and the next one. And the longer it gets, again, the more data you need to learn it. But yeah, I haven't worked with them hands-on, so I don't know details.
But you know, there ought to be a way of kind of narrowing in on sort of the proper structure of the data. So if we're looking at an economic time series, there's probably going to be seasonal patterns in the data. Right. You know, like if it's sales or something, it's going to be bigger, you know, around Christmas time, stuff like that. But anyway, I mean, that's something I'd like to kind of, you know, explore on a more systematic basis. Because that would have pretty big implications for sort of the world I'm in. You know, if you could come out and say, okay, well, in these types of standard models, I don't know, what do we want to do? We want to predict inflation next month. Right. You know, we've got we've got our standard kind of ARIMA models, and then there's this other stuff, and gee, it might work better. Yeah, I don't know how to think about these. Like some days I feel like they're going in the wrong direction. The other days I think, okay, well, it's working really well, so maybe they know something I don't. But
So going from even like if you compare like CNNs with these transformers, right? Like they're even using transformers in image now, like in images, and it's doing really well. But the problem is, so when you go from a CNN to transformers, like CNN has that translational invariance, right? So you know in images, the objects you want, you don't care where it is. So you know that you put that in as a prior, maybe it's similar to the seasonality in the time series. You know something about the data that you try to incorporate. And usually that means that you need less data and maybe you get better results. But transformers are going the other way. They're trying to remove as much of the assumption as possible. It's just you literally trying to map two sequences. But the catch is you need a lot more data, but you don't need to know anything about your data. So if that's where you are, I think that's usually how they work best. But if you know something about the data, then I don't know whether you want something that makes no assumptions. I mean, from a theoretical computer science perspective, I don't know, these professors seem to really care about making zero assumption and seeing what they can get with billion amounts of data. But I kind of like the other way around.
Well, is there kind of a is there sort of an in-between alternative? Okay, so suppose we have a bunch of kind of IoT measurements.
Sorry, what's IoT?
Internet of Things. So it could be, you know, sensors on an engine or motor of some type. So suppose we find instances in which, yeah, the motor sort of went bad and we had sensor observations beforehand. And suppose we have a number of those. Could you basically create a bunch of synthetic data that kind of looks like that and use that to help train the transformer models?
Yeah, I mean, I don't see why not. Yeah, that's one way to train these big models, right? If you have, even if it's like in a more sort of physics-based scientific, like if you have differential equations for your system, which maybe you don't want to solve all the time because it's slow and expensive, you could go and solve them and get a bunch of data and then train one of these models, transformer or other things, and then it would be much faster. So that's one direction that is like actively pursued in almost all sciences. You have like your fluid mechanics simulations, you have all these software packages that sort of solve at great detail the dynamics of your system. You create a bunch of data, you do it once, but then you train your model and it's just faster. Of course, if you're missing a region in your data, you will not get it. But if you have a big enough data set, it will work, right? Yeah. I mean, I think there are ways of making them work, but you're basically trading off, I think, accuracy with speed. I don't think you're gonna get something out of it that you necessarily couldn't get in other ways. So that's why I'm a little bit,
what do you mean by that?
Well, you're not, I guess I wonder how you would you discover something in it, or are you just creating a somewhat clever lookup table for all your experiments that you did? So I guess the question is, does it generalize to beyond just the data you showed it? I mean,
well, okay, but sort of what's wrong with the lookup table?
No, it's totally useful. But I mean,
at some level, we all kind of get down to that.
that's true, but I feel like as humans, like if they put you in a completely novel situation, you probably draw analogies between other situations that are similar but not the same, and make maybe a clever choice of like a good decision. But I feel like these models are just memorizing and just looking up exactly. But maybe that's not true. I don't know. Maybe they can interpolate between similar things, and it would be just like humans.
Yeah, so are you familiar with a control chart?
Control chart. Doesn't ring a bell.
Let me see if I can find one. Hold on.
Oh, that's the one with the upper and lower boundaries. I think you showed us
that
at
type
some
of
point.
stuff. Yeah.
Yeah. Yeah, I think you showed us. Yep.
Yeah,
Yeah,
okay.
I've worked with it with sort of power grid prediction with the clients. So they want it to be within some.
Okay, so in in this area, which kind of goes under the heading of operations management, there in these control charts, people have noticed over time sort of common patterns of stuff happening. And part of it's sort of application specific, part of it is sort of a little more general. I don't know, if you got a machine that's drilling a hole, and that hole needs to be within certain tolerances. But you get some patterns of variation generally. So, I mean, you're starting to kind of drift in a certain direction, or sort of the volatility is changing, it's kind of going up and down more. Those are all kind of common patterns that people have noticed. And to have something that would do a better job of picking that up. So again, I mean, it's kind of, you know, creating a lookup table, if you will.
So do you want to predict it, or do you, or I mean, detect it, or do you want to maybe control it?
Well, I think the controlling part might involve a little more intervention. So I mean, you got to take the machine offline and recalibrate it.
So why is it a difficult detection problem, like volatility? Couldn't it just be like a FFT and you look at how fast you're going up and down, or just look at how often you're outside of those lines given a period of 1 week? Or like, isn't there these heuristics? It seems to be an easy problem, but why is that difficult?
No, I'm not saying that it is. I guess one part is there may be certain patterns in that control chart that will wind up sort of being more predictive or give you an earlier stage. I mean, ideally, what you'd like to do is you'd like to find out, you'd like to get a prediction that you're going to exceed a bound.
Right. Yeah, so I guess the question is, how far in advance can you do it? And maybe if you just eyeball it, you can't tell, but maybe there's something in the data that's predicting what's going to happen.
Yeah, that's kind of my conjecture.
I see. Yeah. It also relates to these chaotic system, right? So if you are in a chaotic zone, usually there is a period of volatility before you go away from the fixed points, right?
Not familiar with that. How does that work?
I'm just trying to find an example of what was it called? Like, I think you can even see it in Lorenz. We talked about the Lorenza Tractor, right? You know that what that is. Like, it's like a classical first year course. When you do chaos, that's how they teach it to you. So there's basically two fixed points that are both metastable. So let me just find yeah, if you just do, you can just look at the animation in the Wikipedia. I'm just sending it. Yeah, it's sort of this three-dimensional system. It's a very simple system that you can set the beta to make it more or less chaotic. You get these two fixed points where you are within close to the first one versus the second one. And
what's this called?
It's called the Lorenz system, Lorenza Tractor.
I'll post a link. I'm gonna take a look at it.
Yeah, so you've definitely seen this two sort of circles that with the thing going around them. But if you look at the animation on the top right, like
Yeah.
One of the features is that sometimes you stay near one of the fixed points for a long time before getting further and farther away and going to the other one. So it's like two sort of points that you can be at, and it's really hard to predict when you're going to go from one to the other. But I've seen actually in the context of finance, people using it to basically, so basically when you are closer to the center or you're going like very slowly, you know that you're more stable than when you're a little bit away from the center. So at that point, you can predict that you're going to go to the other one eventually or very soon. So I've seen people using that for predicting financial markets, but I don't remember the paper.
Yeah, no, I haven't seen this before. Well, I haven't paid attention to it before, at least. Let's put it that way.
Yeah, well, it's a common feature of, I guess, dynamical systems with chaos, right? Like you could stay around the fixed point for sometimes a very, very long time, but then at some point you speed up and then you move away from it. And that speeding up, I guess, is just the volatility you see. And you can see the equations are very simple. Like it's just three coupled ordinary differential equations. Yeah, so I think that paper that I'm mentioning, the finance one, it was a famous one. I just can't remember the name of it was a physicist, finance guy who'd done it. So basically their whole, so obviously they wouldn't share all the details. They were actually using it for trading, but it was a high level thing. And the way they did it was they could predict when their predictions are more reliable and when it's not. So when it was not reliable, they just wouldn't listen to their own prediction. Right. But when it was more stable, then they would use it to exploit the market.
Interesting idea.
I think it's also used in weather prediction, which might or might not be a harder problem. I don't know. Yeah, I see lots of posts on Lorenza Tractor and finance prediction. So you can just, I guess this, yeah, I'm sure there's lots of work on that. Yeah, speaking of finance, maybe I can ask you for like a quick advice.
Sure.
So I've continued to put money like every month into my mutual funds. I haven't stopped. Like I'm basically going about, I don't know, 1,000, 1,500 a month or something. It automatically goes into my mutual funds. And so I'm wondering though, like, so I have a choice of also maybe try to pay down my mortgage. So there is a fixed amount of cash I could just put in and that goes directly to and I know the interest rates, at least in Canada, are rising quite a bit. So right now I have a very low interest rate because I just renewed before all this craziness. So I'm probably good for the next 4 years at, I think my rate is like 2.3% or something. It's a decent rate. So the question is, I guess, does it make sense to get the cash and just pay off some other part of my mortgage, or does it make sense to continue contributing to these mutual funds, which is basically index funds?
Yeah. So here's my hunch. I mean, I assume Canada is just kind of following along with the US and the rest of the world. In terms of equity markets. So yeah, here, I mean, we're off, roughly 20% or something. So I think there may be a little more downside yet here, but it's not a bad time to put money into the market, I don't think.
Okay.
So, it may go down, but it's certainly a whole lot more attractive than was, I don't know, first of the year.
Yeah, I did have a jump a couple of days ago. So, but
yeah, so I mean that's one observation. Another is that I mean, what's inflation running in Canada now?
8 point something percent.
Yeah, okay, so it's about the same here. So at any rate, if you have a fixed payment that you're making, the longer you can stretch that out, the cheaper it's going to be for you.
Right.
And that, I mean, you're paying it back in nominal dollars. So if you got 2% interest rate, inflation rate is running 8%. That means, roughly speaking, the value of your payments are declining 6% a year. The real value of your payments. That's a great deal.
That makes sense. But
And
I mean,
why would you want to give that up?
that's true. But I guess that would make more sense if I was going to keep it as cash. It would make sense then to pay it off as opposed to leave it in my bank account. Or even then, that's probably
yeah, but I think rather than having the money sit in cash and lose 8%, you're probably better off putting that in the market now. And then just making your mortgage payments.
Okay. Makes sense.
That'd be my hunch.
But I'm guessing maybe when the time comes to renew my mortgage at a much higher interest rate, at that point, it might make sense.
Why would you? Okay, is this a adjustable? I mean,
no, it's a fixed term, 5 years. So 1 year is gone. So in four, I guess it's probably okay. If maybe in 4 years, lots of things have changed. I don't know. But in 4 years, I probably get my interest rate probably doubles. Now the Canadian interest rate is going ridiculously.
Yeah. So I guess what I would think about doing, I mean, could you potentially pay it off?
Yeah, that's a lot of money to pay off. I mean, I could get rid of most of my investments and get close, but
yeah. So I guess what I would do is I would hang on to your equity investments, and in 4 years, that amount's probably going to grow, not by a huge amount, but certainly by something. And, you could kind of, the next time your mortgage rate jumps, you might think then about paying down some of it.
Right.
Kind of with the incremental savings you've gotten from not paying it off. So, I mean, if it takes X dollars to pay it off now, you could take that X dollars and put it to work in the market.
How are rich people like preserving their wealth now? Like, are they just losing it, or are there like clever ways that they know of? Like, they probably don't want to aggressively invest, some of them, and they also don't leave cash around in their bank accounts. So what would they do? Just buy real estate, or what do they do?
Yeah, actually, gold hasn't worked out so well. So I know some people have gone into the crypto space.
That doesn't sound like
it. It worked for a while. But Bitcoin is down in the low 20s. So essentially, any money you put in at the start of the year, you're probably looking at a material loss on that. I know there are some people who successfully use what are called momentum-based strategies. And these are people I respect. So intuitively, the idea is you sort of overweight your portfolio towards stocks that have done well in kind of the recent past, 60 days, something like that. And then underweight the ones or the parts that haven't or have done worse.
Mm-hmm.
Okay, now these don't generate a great rate of return, but it's maybe a percent or two better than the overall index.
Mm-hmm.
So I mean that's one. You know, the other is just kind of to take material sector bets. So one guy I know who does this and is pretty smart. This was back early in the year, made a big sector bet on energy stocks, oils.
Mm-hmm.
Okay, so that one's worked out pretty well for him.
Mm-hmm.
And I guess I don't know if you're a real kind of significant player, then there are some other tax strategies that you can exploit. So one I know that some people were doing was buying up certain land and converting it into some type of trust, and then kind of giving the trust away to some other organization.
Okay.
So it was kind of weird in that normally you wouldn't think that would work, but because of the way some of the tax incentives were structured, it could be profitable.
Mm-hmm. Yeah, I mean, it seems like every time historically we've had a significant market downturn or any sort of thing, like rich people always end up better on the other side. So they know something, maybe just because if you have more money, you end up, but it seems like if nothing had happened, they would have less money at the end of it than if all this turmoil happens. Like they know how to take advantage of the chaos better than, I guess, less rich people.
Yeah, I mean, I think that's kind of true. And I think this is generally the way it would work. This is Warren Buffett's phrase, something like, be cautious when others are greedy and be greedy when others are cautious. So in other words, if measures of valuation are getting too high, be careful about overinvesting. Likewise, if measures of valuation get cheap, then it's time to get back in.
Yeah, I think that's also like aligned with what Peter Thiel, like he wants like no competition. You always want to be a contrarian, but you also have to be right. So if you can do both at the same time, you're going to be fine.
So I mean, last November I took out a significant chunk of my investments and basically put it into a market neutral hedge fund. So what I'm wondering is, I'm kind of debating whether to get back in. So the market's probably, 20-25% lower than when I started. So, I mean, that would be an example of kind of how you'd play that game. And you can kind of do it with real estate too. But that's not a risk-free proposition.
Yeah. There doesn't seem to be any risk-free ways of making money, right? There shouldn't be, right?
Well, yeah, I mean, that's kind of what finance and economics will teach you.
Yeah, I guess you can find arbitrage opportunities and things of that sort.
Well, but arbitrage opportunities generally don't last long.
Yeah, so you gotta, I guess, keep on your toe.
Yeah.
Okay. Yeah. So do you manage your own, like, do you do your own
Yeah.
trading? Okay. Okay. How much time would you say you have to spend on it to be effective? Like, do you like every day you do it, or is it like a once a week kind of thing?
Well, you know, it's you kind of adapt to the time horizon.
Mm-hmm.
So for example, since, you know, I got other stuff I spend most of my time on, I don't spend a lot of time looking at the markets. So the adjustments I make are more like, you know, setting the direction on a tanker a couple
Mm-hmm.
degrees different.
Yeah.
Um, so generally what I'm trying to do is look at what I think the payoffs are going to be over the long term,
Mm-hmm.
and then kind of overweight those sectors. So yeah, I've got long time positions in a bunch of tech companies.
Mm-hmm.
Um,
So is it just all based on intuition, or do you have like models, and do you have like more quantitative?
no, it's more intuitive based.
Mm-hmm.
And you know, again, what that's done is it's done sort of better than the overall market by, I don't know, a couple, 3-5% a year.
Well, that's pretty good. I mean, most traders can't boast that much
Yeah,
year over year.
that's true. Yep. No, I mean, I would say, well, okay, so the performance of my investment portfolio is generally about the same as the overall markets, except that I've kept about between a quarter and a third in cash.
Mm-hmm.
So that means the risk of my overall portfolio is a lot less.
Mm-hmm.
And it's times like this now where I've got that cash and I'm thinking, okay, you know, when do I get back in?
Mm-hmm. And I guess you're losing whatever 8% on it, right? If you don't do anything with that cash.
Yeah, but still losing 8% is better than losing 25.
Yes. Mm-hmm.
Um,
I
no,
feel like
but
we still don't know if it's bottomed out or not. It depends a lot on Russia, Ukraine, like China, if it tries to attack Taiwan. It's like a lot of things that seem to be very unstable now.
well, I mean, in my mind, sort of the instability of the world kind of resides in Washington, D.C.
Yeah, but it used to be true. You think it's still true?
Well, it didn't used to be so unstable.
Yeah, that
Uh,
too.
you know, I mean, a lot of people characterize what's gone on as sort of, you know, a series of mistakes, and I disagree. I think these are all intentional choices that our leadership has made.
Yeah.
Um, you know, you know, in the U.S., they want to create immigration crises so they could use that as a mechanism for enhancing their political control. They certainly done the same thing with energy.
Mm-hmm.
So the price of oil, couple months average, before Biden was elected, was about $40, $30-$40 a barrel.
Mm-hmm.
Okay, and now if you go like a month or so prior to the Russian invasion, it's up to 90. All right, those were Biden's choices, intentional choices, and they're finally coming out and admit that now.
Mm-hmm.
So, okay, you know, what do we get from that? Well, people who own energy are becoming a lot wealthier. People who use it are becoming a lot poorer.
Mm-hmm.
Um, And I mean, it's not clear it's having any material impact on some of these supposed climate goals.
Yeah.
So you've got China opening up new coal production facilities. You've got places in Europe now shifting to coal for energy.
Mm-hmm.
Okay, both of which, I mean, you know, that's a fair amount dirtier than other petroleum products.
But the shift in Europe is directly linked to Russia's invasion, right? Because they're not.
Well, yeah, I mean, Russia has cut them off from, you know, their natural gas, but, you know, they also had a significant, or France in particular, had a significant nuclear presence.
Yeah, but they've been divesting or trying to stay away from it long before, right? Like Germany, they
Yeah,
shut
okay,
down all
but
their nuclear.
you know, I mean, you know, if global warming is your issue, then I mean, nuclear power looks pretty good.
Mm-hmm.
You know, there are waste issues to be sure.
Yeah. The problem, I guess, I just recently listened to a podcast. I can't remember what it was, but it basically was trying to frame this whole energy or climate as a game theoretic scenario, and it just doesn't work, because if Germany does something right, like put on nuclear power plants and don't do any coal, everybody benefits. But if China decides to do more coal, everybody suffers. So, but nuclear, if something goes wrong with your nuclear plant, Germany suffers locally, right? So it seems like the benefits and the costs are not distributed in a way that incentivize countries to make the right choice for global warming or for climate. It makes sense for them to be selfish, and maybe we don't want a nuclear plant because that could cause a disaster. We don't want to even take the chance, and I don't care about the climate because everybody else is also not caring about it, right?
Yeah, I can see a challenge in that. Yeah. But there are potentially ways around that too.
Mm-hmm.
Um,
So they have the carbon credits or something, right, which you can sell or buy. So there could be a market for, you know, buying more, the right to burn more fuel or something.
Potentially, yeah. I know they've tried to do that to some degree. I don't think it's been terribly successful, but I don't know the reasons why. But there's also kind of a technology side too. So there are a number of outfits that are doing, you know, significant experiments in carbon sequestration.
Mm-hmm.
Basically, you know, pulling it out of the atmosphere.
Yeah. Elon Musk had a competition, right? Like trying to get people to come up with new technologies.
Yeah, so I know there are a couple that are kind of in semi-serious operational mode, and kind of the question is, can they scale enough to make a dent in it?
Mm-hmm.
And I think the other big part is sort of figuring out how to do solar more intelligently.
Mm-hmm.
So, I mean, one of the big problems here in the US is power transmission.
Mm-hmm.
And that's actually set up in a really sort of complicated regulatory structure. So if you had an easy way of, say, generating solar electricity and sending it out, I think you would have a very tough time implementing that, even if you had the technology.
Mm-hmm.
So at least I mean, here in the US, I think there are a bunch of institutional barriers that people are going to have to address. And they probably haven't paid attention to them yet, because I don't know how close the technology is. I've heard some people talk about approaches that actually generate a fair amount of power with sort of less effort.
Mm-hmm.
Um,
So I guess there is no, so I know in Australia, they have this sort of privatized power grid, right? So if you have a solar farm in your farm or whatever, you could actually choose to sell some of that into the grid and make money, or sometimes you even make money by taking on some of the from the grid. And they were trying, the company I was talking to, they were trying to basically do arbitrage on the power grid.
yeah, we've got something kind of like that here, and it's awkward because there are oftentimes really disparate prices. So the price that a utility has to pay to a consumer for getting X number of kilowatts in versus the price that it would cost them to produce it through some other mechanism.
Right.
So, yeah, I mean, energy economics is going to become hopefully a lot more interesting to people. They're going to pay a lot more attention to it.
Right.
Yeah, I mean, there are also sort of power grid system vulnerabilities that most places have. Certainly, we're no exception to that.
So probably all ancient technology, right?
Yeah, my understanding, some of them are still running COBOL.
But that might not be such a bad thing, you know, if you upgrade to the latest, like probably every hacker would be on it, right?
Yeah, but yeah, I mean, I have to, find somebody my age to know anyone who'd ever written anything in that.
Yeah, yeah. So are they on the internet? I hope not, right? Hopefully they are somehow air gapped, those systems, you would hope.
I don't know kind of how it's set up, but there is, there is a lot of vulnerability. So I've heard.
I saw the Die Hard movie, the one with the fire sale. I don't know if you've seen that one. It's not the last one, but the second to last. Like that movie is about this guy who's basically performing a fire sale. I don't know if you know what that is. It's basically hitting the infrastructure, the government, and public sector at the same time, so that if you hit one of them, they'll recover. If you hit all three at the same time, everything collapses. And one of the part of the movie was to get into the power grid, they had to go there in person because they couldn't access it from the internet. So they had to go in with the guns and try to shut everything down from the. I don't know if that's true or not, but I guess it makes for a better movie.
Yeah, I don't know. I don't know. I think, I think we have a lot of vulnerabilities that we don't really think about and don't understand.
It's just a matter of time until like China and Russia exploit it, right? In case of like US, they seem to be much savvier at like hacking, and Israel as well, like at hacking infrastructure and like doing that kind of thing, like just over the like from a cyber perspective without any guns.
Yeah, that may be true. There may be some sort of mutual assurance destruction package going on here as well.
Right. That's what we need, another arms race.
But yeah. I don't know. I mean, that's kind of a logical inference. I mean, if you could accomplish much of the same without sort of physically hurting people and putting yourself at risk. But yeah, in that world, then the only guys are going to be safe are the kind of the farmers in Alberta and kind of upstate BC.
Yeah, but I wonder if there is any safety once everything falls apart. Like, I don't know, like Yeah, I'm not sure. The safety might be short term until once all the infrastructure dies, I'm sure like people will be looting on the streets and killing each other. So there's not much safety.
That's certainly possible. Yeah, an urban environment might not be the best place to be.
Yeah, that's true. That's true. Oh well.
All right, so go. Yeah, I don't know. Yeah, go stock your survival cabin.
Yeah, so yeah, it would be funny if it ends up that those people were the smartest of all, anyways, in those crazy survivalist nutcases with a bunch of AR-15s and a lot of ammo and water. They have to go ask for their protection.
Well, if things get really bad, then the currency is going to be bullets and bourbon.
Yeah, that sounds about right.
Yeah, let's hope we don't get there.
Yeah, yeah. All right.
Anyway, yeah, I need to jump off here because I gotta, take care of a couple things. I'll send you a link for next Thursday.
Yeah, I was going to ask you, so can you remind me what the time was? So now I have to do an interview 2 to 3 p.m., which is, you're in Mountain Time, so it would be 1 to
Eastern.
2. Oh, you're in Eastern Time.
Yeah, so that'd be 3 your time.
3 my time.
Is that going to work?
Yeah, so your class is 12 to 3 then?
No, 6 p.m.
6 p.m., which starts at 3 for me. Okay, okay. No, that should work. Yeah. That sounds good.
Yeah, I think I've got a couple of chess players in there too. So in the class, so if there's alpha chess or alpha chess 0 examples you can talk about too, that'd be fun.
Okay, okay. Yeah, I guess it doesn't fit into the El Farol thing, but I could talk about that. I don't know, whatever you think is interesting. I haven't prepared anything, so whatever you think would be most interesting, I'm happy to chat.
I'm just trying to kind of give them a gateway to thinking about reinforcement learning more broadly, to try and understand sort of how some of these technologies are kind of how they function and how they're going to wind up being used.
Mm-hmm.
And I think the whole multi-agent simulation framework is likely to be a really important tool going forward.
Okay, yeah, I mean, I can do a talk on how about multi-agent systems, and I can bring in the, I guess, the advances that eventually led to the StarCraft game, right? That's a multi-agent system that they use ideas from the AlphaZero, AlphaGo that they use to solve chess. So there are, okay, so that's a good, I think that's a good topic, because I think that.
Yeah, and don't put a lot of time into this, but it's kind of like, here's what I think is interesting and why.
Yeah, no, that sounds good.
Yeah, and if you want to use your other presentation too, that's great.
Yeah, I can probably link it to that, but yeah, I'll figure something out. Yeah.
Yeah, I mean, this is not a highly technical audience. I mean, we're not going to academic conference or stuff like that.
Yeah, yeah.
I mean, just pretend you're talking to, I don't know, business people or something.
No, that makes sense. Yeah, I have lots of interesting angles that I think they would find interesting. So how did David do it? Did he make slides, or did he talk? Did he just do a demo? How did he do it?
A little bit of both. He had a couple slides, had a couple demos. Mainly did talking.
Okay.
So I mean, you get this stuff started, you never really know where it goes.
Yeah, yeah.
So yeah, I mean, could be 5 minutes and we're done. Could be an hour.
Okay, cool. No, I mean, hopefully we can keep it interactive and it would be more fun, right? How many students do you have in class?
It's a small group. It's about a dozen.
Okay, so that's great. So it's not like 500 people. So yeah.
So that means, yeah, they're a little less shy about talking.
Yeah.
And some
Okay,
of them are
cool.
pretty good.
Good. Yeah, I'm looking forward to chatting with the chess players, because I don't know if you heard, like the world chess champion decided not to defend his title, which is unprecedented kind of in modern history. He just got tired. He's bored. He wants to go play poker. And so now.
So he wants to play poker.
Yeah, so he started playing poker and making money, and he's just sick of chess because he's been so dominant in the past 15 years, 10 years, that he doesn't feel there's enough competition for him to re-defend. He's defended his title 5 times already. He said, well, what do I get gained by defending it one more time? So he's just saying, okay, you guys go fight for it. He's still the best player in the world, which makes it a little bit awkward because his rating is by far the best, but somebody else is going to be the world champion, which is kind of weird.
I guess, if you're, was it Magnus somebody?
Yeah, Magnus Carlsen, yeah.
Yeah, okay. So if you're him, you get to do what you want to do.
Yeah, that's basically what he says, that he's just not motivated enough, like being so much better than everybody for such a long time. Like he doesn't see any challenge, I guess.
But it's going to be interesting to see if his talents really extend to poker.
Well, he did well in the recent, there was a Norwegian poker tournament, and he didn't win, but he cashed out. Like he went far enough to make money. I guess that sort of encouraged him to continue. So he seems to be a decent poker player. He's probably not going to be a dominant poker player, like same way he's been a dominant chess player, but.
Well, but it would seem there's a lot more randomness in poker.
That's true, but if you look at the Phil Ivey and Daniel Negreanu, and like all those people have been playing for many, many years, and they've made millions of dollars, right? So somehow they manage to handle the uncertainty and overall make a lot of money. So it seems to be, I don't know what is the percentage of chance versus skill, and you can always like lose no matter how good you are, but it seems like over a long term, those people always make money, so.
Yeah, I think part of it, I think we see the same thing in financial markets too, that the traders who are more successful over the long term tend to be more risk tolerant.
Mm-hmm. Yeah. And but they go to like incredible lengths. I follow one of them on YouTube. Like he has this blog, Daniel Negreanu. I think he's one of the all-time highest earners in poker world. And like he streams his playing online poker and explains his mind, like when he's deciding. And he actually has a random number generator on his desk, and sometimes he pushes it and makes a decision so that not to have a pattern for the opponents to exploit, because he's already figured out what is the proportion that he should do a certain thing, and he just follows it. He doesn't think anymore, okay, maybe I should do this. He just follows the probabilities. And it's amazing how bright he is, because you don't see the opponent's hand, and he explains what he's thinking, and he tells you why he's making a decision, which I would never make, even like when it comes to bluffing or anything. But it works out. Like sometimes it doesn't, but a lot of times it works out. So like it's they got it down to a science. I think if you just show up, you have zero chance like winning against them.
Interesting. No, I haven't paid any attention to that. That'd be interesting to look at too.
Mm-hmm. Yeah, maybe I'll mention that there is a poker playing agent that also was trained and is beating the people in Texas Hold'em, like heads up Texas Hold'em. Sorry, not heads up, actually 5-person. That was the main advance. Yeah, but I can talk about that too. So I think that's an interesting.
That'd be fun.
Yeah, it doesn't use reinforcement learning. It's just game theory, but I think that's still interesting. Anyways,
all right. Okay. Well, great to talk, and yeah, we'll see you Thursday.
All right.
All right. Thanks a lot.
Take care. Bye.
Bye.